All right. So in this case scenario, what we're going to look at is we are going to look at the rental property. Okay.
Mm-hmm.
With the rental property, a few things that we need to know. The most important thing I would say about the rental property, and the reason that people in general, right, conceptually, why do people chase after rental properties? Well, because they could, not literally, but conceptually receive tax-free income for a while, generate a positive cash flow into their pocket, while tax-wise show not only zero net income, but sometimes also show losses. Now, why would it be such a gap between the cash flow statement, right, and
Mm-hmm.
the P&L per taxes? Okay.
Mm-hmm. Mm-hmm.
So where is that actually coming from? Well, it comes from the concept of depreciation. Okay.
Mm-hmm.
In specifically in English, doesn't matter if it's going to be books per tax or books per actual financial regulations such as GAAP.
Mm-hmm.
We're going to have long-lived assets, okay,
Mm-hmm.
or long-lived intellectual property. In English language specifically, there is a distinction between depreciation for intangible and for tangible assets. For intangibles, it is amortization, okay?
Mm-hmm.
For tangibles, it is depreciation.
Mm-hmm.
Now, according to the tax code, depreciation happens or depreciation is calculated according to makers tables using collateral table for the class lives. We can later on, I can chat out to you what, well, you can look up the abbreviations here. So
Mm-hmm.
for depreciation to calculate, we use makers table. Okay, this is specifically to calculate what percentage in which year to take. And then the
Mm-hmm.
class lives are determined by clutter table. There may be two Ds, but I believe it's a 1D. So, and it's mm, class lives of assets for depreciation and recovery. So that's what that stands for. Um, makers, it's modified, accelerated, depreciation, calculation, something, something for the recovery as well, okay, of the
Mm-hmm.
asset value. So the way that it works is usually assets are split into classes, okay? Every single asset you can think of, may it be a computer, a phone, a calculator, a washing machine, a dishwasher, I don't know, you name it. Even
Mm-hmm.
a tree sometimes can be subject to depreciation, as long as it can be either used or in case of the intangible property, let's say it's patent protected or something along the lines for a set amount of years. Okay.
Mm-hmm.
So when it comes to rental properties, there is a large distinction between personal uh, property and actually rental property. So in order for the property to be depreciated, the property must be used in any type of rental activity. Further, the rentals are split into two categories. First is going to be residential, okay, and is going to be depreciated over 27 and a half years, 27 and a half years. And is going to be commercial rental activities. Commercial properties are depreciated over 39 years, okay,
Mm-hmm.
39 years. Now, our system, once you actually select, what is that
Mm-hmm.
activity, it will classify it for you, and most likely you won't have to fix or correct, what is that life of the asset over which is going to be depreciated. One thing you must ensure, however, is that you always select makers, okay, makers in within the input. So if we're going to close this and we're going to go back to the input, ideally, you're going to find it within deductions. And then there is direct input, but there is depreciation, okay? Now, please keep in mind that depreciation, yet again, the same tab would be used for amortization. Simply, you would select differently rather. So over here, we do have the name of the property. You would tell it to which form to go. So rental properties, unless I specifically say that, oh, Simba, you know, it's going to go to a different schedule. It will be reported on Schedule E as a passive rental activity. Okay, passive rental activity.
Okay.
Remember, the quirky thing is that Schedule E has 2 pages, and you can have multiple page ones on which the rental properties are going to be reported. So you could have Schedule E page 1, first page, Schedule E page 1, second page, and da 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 da. But when it comes to Schedule E page 2, you can only have one Schedule E page 2, okay? All right, so we would select that indeed it does go to that schedule. What is the name of that schedule? Name of the activity or number, that is it. And then of course, within the rental property, there is always going to be portion that is depreciable, meaning over time, it is believed to be used up, okay, lose its value. Has nothing to do with the actual fair market value or appreciation of that house, okay, or apartment or condo, whatever that is. So for these purposes, well, for the purposes of depreciation, a rental property is going to have 2 components. Well, first one is building. Second one is land on which the building usually stands, unless it's apartment, okay? Further, most likely for rental properties, you will see furniture, appliances, things of that sort, okay? And we will need to know, well, when was it actually placed into service? Meaning, 2 things could have happened. It's either the day of the purchase is when the asset was actually also placed in service, or maybe let's say the person purchased it, but then they had to remodel it and they haven't listed it for rent right away. So at that point, it will be when they actually listed it to become available to tenants. Very important event to keep in mind. A rental property becomes not on the day that the tenant moves in. It becomes rental on the day that the renter makes it available for any tenant to move in. Okay, starts, let's say, advertising that property, puts it on Zillow or you know, contacts realtor when it's ready, or on Craigslist. However, when it's ready to be rented, that's when it's considered rental property, not when the tenant actually moves in. Okay. So we're going to go ahead and click on the first one. We're going to click on details. So we're going to see that it's a building category. This is where you're going to be selecting all kinds of different things, okay? Automobiles, furniture and fixtures, machinery and equipment, buildings, improvements, land, miscellaneous, or amortization was the 8th one, as you saw. Date, place, and service. We can further then confirm with the client that this is when he actually started advertising, okay? Now, method, well, 25.5 years, just like we talked about, because it is residential rental, okay? He is using it for Airbnb, so it's not a commercial property. It's not used as an office building or anything like that. Turns out that he also had it on his 2021 tax return, because we can see prior depreciation from this property is $8,052. And in this scenario, one thing I wanted to point out is where you see makers 27.5. So within this tab, if we actually kill it right now, you're going to see there is makers, acres, non-recovery methods, and lend or no depreciation. I highly doubt at any point you would be selecting acres, okay? Because it was like in mid-60s when that system stopped being used, okay? Just 1 second. All right, in the mid-60s. So by now it's, you know, safe to say that even if it was a commercial building, it has been fully depreciated. Okay, so acres very, very rarely. There may be a few instances for farm equipment where specific acres election can be selected, but we don't deal with farms. And if there is going to be such a scenario, I will let you know. Okay, for now, no point of dwelling on it. Now, you are going to see that there is always going to be an option, makers 3-year percentage, makers 3-year straight line. So no, we're not going to be selecting straight line unless the client specifically tells you that, well, one, they explicitly want their tax depreciation to match their book depreciation because they are opting out of tax treatment for depreciable assets, which specifically needs to be disclosed within the tax return. And it's not always the best idea, okay, because just creates more hassle for reporting, first of all. So we would always select the percentage. And then once you select this percentage for very particular class lives, you see how there's different class lives? And autos have also different depreciation. We're going to go over that in detail later. But for our purposes, straight line residential rental building, okay? And that gives, there should be more, give me 1 second. Not potentially ideal. Okay, there we go. So there is also going to be non-residential choice and railroad. So this one is a residential rental building. Okay, residential rental building. This is what we're going to select. You can completely disregard that it says straight line on here. The reason it says, well, in a way, don't disregard, but the reason it says straight line is because there is no bonus depreciation or section 179 available. Okay, but always go with the makers and not with non-recovery methods, because once you select makers, it will also determine whether it's going to use mid-quarter or half-year calculation conversion. Why is that important? That's a whole another, you know, part of the tax code that we're not going to go into the detail. But to put it in perspective, you could either take, let's say, if it comes to things that are placed in service in the last quarter, you know, you can either take just for that quarter depreciation, or in certain instances, you could still use half-year conversion, you know, aka mid-year conversion, or you could still opt in into the bonus depreciation. So a whole section of tax code is available for that, and it's pretty lengthy. But the good news is that the system will be calculating that for you. Okay, so if we were to preview which, well, it will automatically cure, it even tells you what it's going to calculate, but half year is usually for the assets that were placed in service in the first through the third quarter. And mid-quarter conversion is used if at least 80% of the assets, either for the business or rental property, were placed in the fourth quarter. Okay, so that's how that works. Again, not to dwell on it, we're gonna move on. We're gonna go back to quick entry now. We're gonna take a look at land. Okay, land. We're gonna click on details, and this is where the land comes in. Quite literally, you would select land on here, right? It gives you even specific thing. And then here, yet again, we're just gonna follow logic. It says land or no depreciation. And we discussed that land, in fact, is not a depreciable asset unless there is the third category besides depreciation and amortization is also depletion. However, unless it is for oil, gas, mineral rights, and potential, in-ground development of sorts, there is not going to be depletion calculated. Okay. So with that being said, well, where the heck is that Schedule E anyway? Well, we're going to go to the income tab. We're going to go down, 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 down. And quite literally, that's what it says. Rental and royalty income, Schedule E, just like we mentioned. The first page is informational. Okay, it's going to just say what kind of property it is, that it's single family residence, who owns it, that's the taxpayer. We are not going to be making any selections as of yet, because actually, well, of multiple reasons, but we're going to go over these next time, what constitutes active participation and not active participation. From the so Airbnb 25,124, apartments.com 31,233. So quite a nice chunk of rents that this guy has received, right? 56,357. What I would definitely verify with him is that Airbnb income and the apartments.com income, that Airbnb was not included in here. Okay, that indeed whatever he put on there, those are two separate instances, and that the total rents are 56,357. Okay, again, as of now, this is for the projection, so we're not going to be so focused on tying everything out to the T, but the ballpark we do need to know. Advertising, well, this is really odd, right? Right away jumps out. Why does it say $99? Who knows? And this is a mistake probably, because advertising, it says $5,884. So whomever was typing this up, well, I don't know, maybe got up on the wrong foot. So I would say we would add 5884. I would put a description for now before we actually, and we're not filing this tax return anyway. It's more of a projection, right? I would say that per worksheet filled out. Okay, note for yourself.
It means like till today, right?
Yes. You can further clarify that with client. You can say, hey, Alex, I saw that you've provided us with the information. Was it kind of, estimates for the year, or was it year to date? Okay, so you can further clarify that with the client.
And we will not delete that 99. I mean,
the what?
The 99 which was mentioned previously, that for the advertising. This one, yeah.
We have no idea where that's coming from. So what we're going to ask a client is whether it's part of the apartments.com or Airbnb. That's what we're going to ask. We're going to see that we saw a note of additional $99. Sometimes it simply doesn't pay off to chase for the projection like we're doing right now, this very low amount of dollars. Okay.
But who filled out this form?
Administrative team. So administrative team fills everything out. Okay. Well, ideally, sometimes they don't, and sometimes they make many mistakes. That's why you need to be able to cross-reference numbers and fill everything out. Okay. Because they're not trained in taxation, they're simply trained in data entry. So I would definitely red flag this, and I would say that, hey, we noticed that there was also an update for $99 of advertising expense. Is it by any chance, coming from any of the reports? If you want, you can also chase it. That really depends what kind of report you have established with the client, okay? And also how much they're paying. If they're paying us roughly, you know, by the time the tax return is initially input and then reviewed with them, if it's very low per hour dollar, I would suggest just asking them, just saying something along the lines, hey, Alex, like I said before, right? We saw this $99 expense. My admin team has pulled it in. However, I cannot track down whether it's from, let's say, Airbnb or apartments.com. Does that ring a bell to you? And then the client usually verifies that, okay? If they cannot also verify it, then you would say, okay, we have a total for 5,884. Is that the only advertising expense? Okay. And then if they confirm, yes, it is, then boom, Bob's your uncle. You've solved that mystery. Okay. Yeah, we'll just go ahead and delete that. Mortgage. Wonderful stuff. He provided us that information, 29,659. The problem is, maybe it's not a problem, but with the mortgage statement, we would also look, okay, so see, this is right away. You see how this is total? Completely incorrect, Whoever was inputting it, this is a good example of where admin does not know what they're doing. What we need is we actually need interest, okay? Interest. So interest paid to date is 10,289 with the 97 cents. So 10,290, 10,290. We're gonna go ahead back here and we're gonna say 10,290, 90, okay. 10,290, boom, we corrected that. Now, one of the things that right away we can notice is that there is also escrow, right? Well, why are escrows actually appear? For many reasons. Most likely the money that goes into escrow is withheld for the property tax purposes. Mortgage insurance is also deductible. So where you see insurance on there, you would also add 104, and I'll show you where.
The escrow means the to save in the bank, right?
Yes, it gets withheld alone, just it's part of the mortgage payment. The reason why escrow sometimes is even done, it is withheld to cover for other expenses such as real estate taxes. And over here, I don't particularly see any real estate taxes, but for the sake of an argument, we could take escrow 9557 and put towards real estate taxes. So we're gonna find taxes 9557. Okay. Utilities, repairs, supplies, that's great. Utilities, repairs, supplies. I don't see utilities, I don't see repairs, and I don't see supplies in here. So this is something to clarify with the client, saying, you know, hey, we saw that you have clarified some information, but could you confirm that this is, for example, projected for the year, and also update the checklist for the Schedule E rental property. So one thing that I'm not finding is we can see blogging here, and he didn't provide any type of particular income for blogging. Okay. Give me one moment. So for the recording wise, I think we're good with the fixed assets and overall review. So we're going to go ahead and